Hello everyone, I am Dr. Ramandeep Kaur, Faculty, Department of Commerce of Bhopal School of Social Sciences, and today I am here to discuss with you a very important topic of financial accounting, that is branch accounting. Now in this video, we are going to understand the meaning of branch accounting, the objectives of branch accounting, classification of branches and the different methods that are followed under branch accounting. Now, before understanding the meaning of branch accounting, let us understand what is the meaning of a branch. Now, a branch is a subordinate division of a head office. Now, various businesses, when they expand to increase their sales, they open their branches into different towns, into different cities, across different locations within the same country or even abroad. So, the accounts that are related with these branches along with their head office is known as branch accounts. So, under branch accounting, the trading transactions of the branches are recorded in the books of the branch office as well as the head office, so as to calculate the profit and loss that is generated by every individual branch and to calculate the financial position of a particular branch for a particular period of time. So, a branch is a subordinate division of the head office. Now, what are the objectives of branch accounting? Why actually branch accounting it came into picture? First of all, to find out the profit and loss of every individual branch. With the help of branch accounting, we are able to calculate the profit and loss of every individual branch so that we are able to understand which branch is performing well than the other branch, and so that we could actually revive the loss-making branches. Now, the second objective under branch accounting is to have proper control over the activities of each branch. With the help of branch accounting, the head office can have proper control over the activities of every individual branch, and thus the wastage of the resources can be avoided. Now, the third objective under branch accounting is to know the actual financial status of the entire business. Under branch accounting, we have understood that with the help of branch accounting, we are able to calculate the profit and loss, or we can say the financial status of every single branch. So, with the help of that particular status, we are able to calculate the financial status of the entire business. We are able to interpret the financial position, the financial performance of the business as a whole. Now, the fourth objective under branch accounting is to make estimations and arrangements for cash and goods for every branch. Now, we know that there are different branches, there are various branches that are actually dependent upon the head office. So, they are dependent upon the head office to fulfill their cash requirements, and they also get the goods from the head office which they further sell out to the customers. So, the head office need to estimate the requirements for cash as well as for goods for every branch individually, so that the head office can make arrangements for these goods and the arrangements for the cash. So, for the estimations and for making the arrangements, this branch accounting is very important. And the last objective of branch account is finally to increase the efficiency of every branch. When the efficiency of every single branch increases, the efficiency of the entire business increases. Thus, these are the objectives of the branch accounting. First objective is to find out the profit and loss. Second objective is to have control over the activities of each branch. Third objective is to know the actual financial status of the business. Fourth objective is to make estimations and arrangements for cash and goods for every single branch, and then finally to increase the efficiency of every single branch, and then finally of the entire business. Now, what are the different types of branches? What are the classifications of branches? In total, branches can be classified into two categories. First is your inland branch and second is your foreign branch. Then inland branches can further be classified into two categories. First are your independent branches and second are your dependent branches. Now, let us understand all these different types of branches in detail. Now, inland branch, from the name itself we can understand this is any branch of which the head office as well as the branch office both are situated in the same country. And for a foreign branch, the head office is in one country and the branch is in another country. It is globally spread across different nations in case of foreign branch. And in case of inland branch, both the head office and the branches are operating in a single country. Then the inland branches can be classified into two categories, dependent branch and the independent branch. Now, as the name suggests, a dependent branch is a branch that is completely dependent upon its head office. Now, for what purpose the dependent branches are dependent upon the head office? They are dependent upon the head office for their purchasing transactions, for their selling transactions, and for the payment of their expenses. Thus, for these branches, for the dependent branches specifically, the head office, they supplies the goods for sale so that the dependent branch can further sell out to the customers. They supply cash to the dependent branches. The head office supplies cash to the dependent branches so that they can meet off their expenses, and the head office even decides the policy for the operations for the working of the dependent branches. Even though these dependent branches are so much dependent upon the head office that the complete set of books of accounts of the dependent branches are maintained actually by the head office. The dependent branches, they do not maintain their books of accounts. It is the head office that maintains the books of accounts of the dependent branches. Second category is the independent branch. Now, the independent branch, again, as the name suggests, these branches are the branches that are free to decide their own policy, and these are the branches that are not dependent on anyone. These are the branches that are not dependent upon the head office to prepare their books of accounts. These branches, they prepare their books of accounts themselves and finally send the trial balance to the head office for approval after a particular period of time, or at the end of the financial year. Now, we know that for the dependent branches, it is the head office that maintains their books of accounts. Now, there are different methods that are being adopted by the head office to prepare the books of accounts of the dependent branches. Now, what are the different methods? Let us understand all these methods. Now, there are four methods basically that are being used by the head office to prepare the books of accounts of the dependent branches. The first method is the debtor method. This is also known as simple debtors method. Second method is the stock and debtors method. The third method is the final accounts method, and the fourth method is the wholesale branch method. Now, here we are going to concentrate basically upon the debtors method. Now, a debtors method is adopted by the head office to prepare the books of accounts of the dependent branches when the branch is of very small size, first of all. Then under this method, the head office prepares the books of accounts, or you can say the head office prepares separate branch accounts for every individual branch. For example, the head office is preparing separate branch account for the Bhopal branch, for the Indore branch of a particular company, for the Gwalior branch of a particular company. So, under this method, separate branch accounts are being prepared for every individual branch, and then these branch accounts that are being prepared by the head office, they are basically nominal in nature. That is, they record all the expenses and incomes related to a particular branch. Then the objective finally to prepare this branch account for the head office is to ascertain the profit and loss that is generated by every single branch. Now, to record the entries for the dependent branches, the debtors method divide the dependent branches into three categories. The first category is dependent branches with cash sales only. So, these are the branches that gets the goods from the head office on cost price and further makes only cash sales. We know that dependent branches are the branches that get the goods from the head office, and these are the goods that are being further sell out by the dependent branches to the customers. So, these branches get the goods from the head office on the cost price and then makes only cash sale. Second category is dependent branches with cash and credit sales. So, these are the branches that again receive the goods from the head office on cost price and make both cash as well as credit sales. Third category, in the third category we are having dependent branches with nominal price sale. So, these are the branches that gets the goods from the head office on sales price or invoice price and sell them in both cash as well as credit basis. So, debtors method divides the dependent branches into three categories. First is the dependent branches that make cash sale only. Second are the dependent branches that make both cash as well as credit sales. And third are the dependent branches with nominal price sales. Now we know that the head office prepares the branch account for every individual branch for every single branch. Before maintaining the branch account, there are certain journal entries that are to be passed in the books of the head office. Let us first of all understand all these journal entries one by one. Now the first journal entry is being passed to record the opening balances of all the branch assets. So, for this particular transaction, the journal entry is branch account debit to branch assets individually. So that when you are preparing the branch account, all the branch assets are recorded at the debit side. Individually, we need to have the we need to take the balances of every single asset. Then to record the opening balance of branch liabilities, the entry that is being passed is branch liability account debit to branch account. Then when the goods are being supplied by the head office or another branch to this particular branch, the entry is branch account debit to goods supplied to branch account. Here the individual branch is the receiver of the goods that are being supplied by the head office or any other branch. Then when goods are being returned by this particular branch or by the branch customers directly to the head office, this particular entry is passed. The entry is goods supplied to branch account debit to branch account. Then when goods are being supplied by the branch to another branch, and this is generally done under the instructions of the head office, same entry is passed as above, like goods supplied to branch account debit to branch account. Then when goods are being supplied by the head office but not received actually by the branch, means we assume that the goods are there in transit. So the entry is goods in transit account debit to branch account. Then when head office meets the branch expenses or sends cash to the branch for meeting its expenses. We know that the dependent branches are not only dependent upon the head office to get the goods that are further being sold by them, but they are also dependent upon the head office to get the cash that they use to fulfill their different expenses, to meet their different expenses. So when the branch gets the cash from the head office, the entry is branch account debit to cash or to bank account in case of checks. Then when remittances are being received by the head office sent from the branch or from the branch customers, the opposite entry is being passed, that is cash account or bank account debit to branch account. Then when these remittances are being sent by the branch but not received by the head office, again we assume that they are in transit, so we pass the entry as cash in transit account debit to branch account. When the balance in goods is sent to branch account is transferred, so the entry is goods sent to branch account debit to purchases account in case of trading concerns and to trading account in case of manufacturing concerns. This is to be understood. And then to record the closing balances of the branch assets, the opposite entry is being passed, that is branch assets. Individually we have to debit the figures, branch assets account debit to branch account, and then finally to record the closing balances of all the branch liabilities, we pass the opposite entry for the opening balance, like branch account debit to the branch liabilities account. Again we write down all the individual liabilities of a particular branch. And finally, the objective of preparing the branch account is to know the profit and loss of every single branch of every individual branch. So we get the profit if the credit side of the branch account is greater than the debit side. So if the credit side exceeds the debit side, there is a profit, and for the profit the journal entry is branch account debit to general profit and loss account. And in case of losses, that is if the debit side is greater than the credit side, then the opposite entry or the reverse entry is being passed, that is general profit and loss account debit to branch account. So in total there are 13 entries that we are supposed to pass in relation to the branch accounting under debtors method. Now based upon these journal entries, finally the head office prepares the branch account of every individual branch in their books of accounts. So this is how the branch account looks like. This is the nominal form of account. At the debit side all the expenses are being recorded, and at the credit side we record all the incomes. So the debit side starts off with the opening balances of every individual branch assets, like with the opening balance of stock, opening balance of petty cash and opening balance of any other asset. Now opening balances of the assets we are having at the debit side means definitely closing balances we are going to get at the credit side. So at the credit side we are having the closing balances of every individual assets, that is of cash, of stock and other assets. Now debit side starts with the opening balances of all the individual assets. So at the credit side we have to record the opening balances of all the liabilities. So liabilities again individually, every single liability we have to write down. The opening balances we have to write down at the credit side. Now if the opening balances of liabilities are coming at the credit side, then definitely the closing balances will come at the debit side. So this goes like this: opening balance of asset at the debit side, closing balance at the credit side. Opening balances of liabilities at the credit side and the closing balances at the debit side. So it moves like this. So after recording the opening and closing balances of all the assets and liabilities, then in between we pass any other entry, that is when the goods are being supplied by the head office to the branch, the goods are being received by the branch. So we write down the entry is branch account debit to goods supplied to branch account. So goods supplied to branch account is coming at the debit side. Then when the branch receives the cash that is being sent by the head office, again the entry is branch account debit to cash account. So to cash is coming at the debit side, and when cash is being sent by the branch to the head office, then the entry is cash account debit to branch. So by cash entry is coming at the credit side, and when goods are being returned by the branch to the head office, entry is goods supplied to branch account debit to branch account. So here by goods supplied to branch account, in case of return, this is coming at the credit side. So by recording all the transactions in the branch account after passing the journal entries at the debit side as well as at the credit side, after recording so many transactions that happens between the head office and the branch office, at the end the head office is actually interested to know how much profit is being made by this particular branch, or how much loss is being made by this particular branch. So this profit and loss figures are being calculated at the end in the form of balancing figures. Now we know that we get the profit if the incomes are greater than the expenses. Income side is the credit side. So if this credit side is greater than the debit side, the balancing figure is profit, and if definitely the debit side is greater than the credit side, the balancing figure is loss. So if the balancing figure is coming at the debit side, we write down to general profit and loss account. This we write down in case of profits, and by general profit and loss account in case of losses. So this is the format of the branch account, and we have understood all the journal entries that the head office passes to record the transactions of its branch in its books of accounts as per the debtors method. Now in the next video we will come again with the numericals of this branch accounting. Till then, thank you so much. Have a good day.